Hey boys, hope everyone had a blessed weekend. We're going to go into this weekly update for ES, NQ, and BTC and what I'm seeing right now in the charts. So let's start with ES. So ES, obviously equities indices have been very powerful, right? And what I'm looking at right now is a wave structure. So what I see clearly is a W-shaped structure here. In harmonic trading, we try to size these up with fib ratios. So if you go from the high to this swing low point here, and the mid, this is your corrective retracement, and then here's your nadir, which is the bottom of this move within the wave structure. Your 886 is right there. So this would be the profile of a bearish shark, meaning even though the price is going up, it's counterintuitive, even though price is going up, which is bullish, it's a bearish shark because at the pattern reversal zone, it reverses down, which is bearish, right? So just think of it that way. You could see this first corrective retrace is below the 618. This extension off A to B goes to the 113, and your projection C to D would be completing at the 886. So that's a key level. And your 1414 is basically your BTC projection. So it lines up really well with fib ratios, and this looks like a very harmonic wave structure. Now what I'm seeing here as well at the 886, if you zoom in, there's a major liquidity pool right here. And you can see this is people that were trying to sell off in the imbalance over here that was created when it broke structure. So you can see here on the daily, here's your sell-off, and if you switch it into a line chart, you have a couple key levels here. So that's your first level of structure being broken. Here's your other structure being broken. And again, you're only considering a candle close below these wicks. So you can see it closed here. And when you flip back into your 3-day chart, on the corrective retracement after a broke structure, there was an imbalance here. They got sold off right there. So that's where a lot of liquidity is waiting. This is your liquidity pool right there. Now, when it comes up into that 886, what I'm expecting is induction or inducement where, you know, they hold the price below this liquidity pool just enough to engineer some more liquidity in that range. And then they basically spike it up to take these guys out in that range. And you get a strong wick here, SFPing, and then a push down. The levels I'm looking at are in this range right here, because you have a institutional order flow entry drill in this range, and you could see it very clearly. We're on the 3-day, but let's go into daily. So you could see there was a major daily imbalance right there. And the rule with this drill would be when you create a major daily imbalance like this, I'm just going to pull up my range fib. You can see it goes nowhere near the EQ. You get an extreme buyback near the top of the imbalance, and then it just absolutely gaps up. So then you created this gap right here. So now you have a very obvious target. You know, even laymen would look at this as an obvious target, the gap. And then you have the rest of this candle. The majority of it has to be, well, it doesn't have to, but it is likely to get rebalanced if we pull back. So what I'm expecting, or what I'm anticipating, is a PO3 in this range, where you create a consolidation under this liquidity pool. Then you get a bit of a manipulation into the 886, which is right there. Strong wick, and then a swing failure pattern in this range before expansion to the downside. To the downside, I would be targeting this gap first. So these internal range liquidity would be taken out here, here, and then I'm looking for this gap fill right there. So that would be an area to take, you know, 75% off the table, if not your whole trade. It could potentially also go in to rebalance this here. And even this is kind of open liquidity right here. So I think these are equal lows. Yeah, so that might actually be that might actually be a target right there. That's your ambitious target. But at the very minimum, I think this gap fill is going to happen after you get this spike down. Now, the rule is with a bear shark harmonic, you fib out from the lows. So from the nadir to the 886, and I'll switch it to my standard fibs. You're targeting the 382, which is just below that institutional order flow area over here where, you know, institutions are horny to buy. So I think if it rebalances the range, it could get front run above the 382. But either way, if you go to the left, you could see structurally we've got some structure in that range as well. So this would be an area where you could expect, or you should look for, a strong buyback. So within this PO3, fill the gap, take internal range, rebalance over here, and then use structure over here to start moving up again. And if you take the range volume profile, you could see there's a large volume cluster right there. This is why I'm thinking we basically move it into the 382 and then maximum around this area. It should get bought back. So that's your range POC. That's the highest volume traded in this zone right here, which on the way down should get a good buyback. So this is how I'm kind of sizing up the ES, meaning we're in the last, I guess, impulse up before I expect a correction. So from here to the 886, you're looking at 2.5 points, right? We're almost there. I think after this gets rated, we're going to have a pullback. And you could almost look at this. Oh, sorry, my phone's ringing. We could look at this last push up over here before we broke structure as our breaker. So I only use, like, I treat this a little different. I only use the candle bodies. I feel like it's a better mean threshold for taking the breaker. And if you extend it out here, that would be right where I expect the manipulation to happen. So now we push it into the 3-day. It's very clear what I'm looking at right now. You have a harmonic wave structure closing at the 886. You have an area below this liquidity pool where you would expect a consolidative range to build, engineering more liquidity so that institutions and big funds that are looking to take the big short will have additional liquidity when they trigger these buy-side stops. And then you're looking for a wick, but no candle close above these highs into that breaker, and that would be a sign that it's looking for an expansion to the downside to fill the gap, rebalance, hold either structure or even wick into the POC where the highest volume traded is. So my targets for ES are going to be down at the 41.58 level. So that's ES. Again, NQ is going to have the same profile or structure. It's just outperforming ES. Tech seems to be a little bit, it's actually the market leader right now, but if you map it out, it's the same harmonic, slightly different ratios, and we're about to hit 886 right there. Difference is there's no real liquidity pool. It was taken here and used as structure for the move up. But you do have this imbalance right here. So if you extend from here to here, the remaining imbalance on that candle should get repriced here and then pushed down. And you have effectively one 3-day gap over here with equal lows on the daily. So right here you have equal lows. And then you have a daily imbalance there. So I think your target for NQ, if we complete the harmonic in your reversal zone, you're looking for this rejection in that imbalance area, and then a push down into the 382, taking out this liquidity, the equal lows, rebalancing that candle, and then getting a strong buyback at the 382. So let's overlay volume. I like to always put in the volume just to make sure it's going to be supported on the way down as well. So again, NQ was ridiculous. You know, there was no sell pressure on the way up. So once you left that value area range, or the value range, you could see you just had like baby pullbacks. You have a bit of a high volume node here, and you have your value area high here. So logically, I would expect one final push into there, maybe something like that with a higher low. Take these guys out into the value area high, and then maybe in this range right here, get a nice buyback. And that would be what I'm looking for on NQ. So now we'll go into BTC. Before I get into BTC, we'll go into BTC dominance. You can see on the weekly chart, I have 3 structural levels plotted. Again, we stayed in this really tight range for a long time. This was like 2 years in this range right here. It just basically ranged to the highs, 48, and ranged to the lows, 39. And basically, you could just treat this as a proxy for where you thought alts would run and when BTC was picking up steam. And eventually, we left the range and tested this structural level and rejected on the daily. So if you zoom in on the daily, that was the level we rejected. And here's the previous structure I've got marked in. And you can see we retraced into this imbalance, pushed up into structure, rebalanced half of this candle, this down candle that broke structure, and then sold off again. So now you've created bearish structure over here, and you have untested structure over there. Here you have consolidation, so potentially a wave up into here, and then I'm expecting structure to hold, and then a similar move down like that. This could have been the early sign that alts were in the rotation, meaning when BTC dominance goes down, but you see total 3 spike, which it was spiking, and it was outperforming total 1, which only considers BTC market cap. You could see it retrace the full candle, whereas total 3 still has this area to rebalance, so it's outperforming. That tells me, it gives me an early sign that people that were in the BTC trade from January, they've been profit taking and rolling those profits into stronger L1s. And now what I'm looking for with total 3, which is only alts, right? You have a local supply line from here to here. You have an informal harmonic structure, which I'm just looking at reciprocal waves more than anything. For me, the 72 is between the 618 and the 786. So I'm using a 113 projection. What my rule is, and again, it's not textbook, but it's been effective for me, is when you get a deeper corrective retracement like this one above the 618, I usually target a projection at the 113. So for me, you could see all the volume traded in total 3 is in this range, and I'm looking for a test of that supply line. What I would expect, you could see it did a tweezer top at the range POC and rejected. So maybe it rebalanced half this candle, and now it's going to push up again. What I'm looking for is a consolidative range here, a fake out to the downside. So this false break, bearish breakdown would be your manipulation in a PO3, and then I would look for an expansion like this. targeting the 113, which would be the top of this cluster over here, taking out all that internal range up to there. And then you could see there's a massive imbalance on the weekly. So total 3 has a major imbalance here to here. This is your mean threshold, and this would be the deviation, which is an idea my boy Alex taught me, who's, in my opinion, the best trader in the planet right now. That's the deviation you'd be looking for. So if it does push up, potentially this 113 could extend to the 1618. So let's say it goes to the 1618. You're looking at that deviation, which would fill the EQ of this weekly imbalance on total 3, and that's, I think, where it would top out in the for short term, and then you'd expect a pullback. If it does this exact schematic that I'm looking at, where it consolidates under resistance with a fake or false bearish breakdown and then expands up, I would expect this behavior where it breaks up, feels a little imbalance over here, has another pullback into a PD array in discount over here, and then holds that supply line. So this would be a Livermore pivot, and this is the strongest breakout entry where you would want to enter for the expansion. So if it does that, this would be an area to take longs on alts. Don't long the breakout, but long the retest if it holds, right? So that's total 3. I'm looking for that if if the rotation is happening right now. Let's look at BTC. Also, Dixie is total piss. Like, look at this. Grab liquidity. Now you have equal lows down here at 97.6. So I expect this to move down quite a bit. You know, if it keeps showing weakness today and we close red with a strong bearish candle, I would expect, because we filled half this imbalance, I would expect this to really collapse in the coming weeks and target these equal lows, and then potentially get a bounce off there, and then just go to the next level, retest, and then see if trend reverses. But if that happens, we have a good case for alts to run and all risk on to run a little bit more. All right, one last time, let's try BTC. So I mean, there's a million things I see here. The main thing is we had a daily breaker there. On the weekly, we had a weekly breaker get respected beautifully. So if you look, this last green candle that took out liquidity here and here, and then pushed down, this was your order block, pushing down to rebalance this area over here, and then break structure to the upside right there. You could see it pulled back in on the retrace, and it held the top of the breaker and then pushed up again. So anything in this zone should be a good buy if we do pull back. Here's another thing my boy Alex showed me that is very interesting. On the 2-week, here's your 2-week imbalance. It pulled into it and then took off and expanded. Here's another imbalance, pulled back, pinned the mean threshold, and then took off again. And now we've created another one here where I've marked in the mean threshold here. So if we do pull back, you would want to see this level get bought back around 28.5. And if you stretch this over to the left, you could see this general area is going to behave like structure right there. So you would want to see that area hold. And I would treat this like a daily breaker right there, because you could see that was the final up candle before a order block was formed and pushed down to raid liquidity and rebalance to the EQ and push up, breaking structure. It didn't close above on the weekly. It's just been destroying these wicks on the way up, and it's been a very tricky range to enter a trade on. But ultimately, we're in an area where I would consider this a no trade zone. So you can see we're trapped between the POC and the value area low, and it's just wicking people out on both sides. Now you have this internal liquidity built up in this range. So it would be very logical to do something like this, fake out, pull back, and basically take all these guys out. And if you go into the 4 hour, you could see a giant imbalance in this range. So the way that would look is basically get everyone amped up about longs, hit the value area high, and then flush. There's your value area high, which is sitting in the optimal trade entry for a short. Sorry, I just mapped this wrong. So if you pin from that wick to that wick, the imbalance candle, here's your OTE, and I would be expecting, if it rebalances, the max I would say it would rebalance would be in that OTE and then get sold off. So I'd be looking for that to hold as bearish structure right there. So that's a scenario I'm looking to play. If it does pull into here, I'm looking for weakness after this candle gets right through this imbalance up to here, and then potentially short to take out these guys. I mean, there's a 2 hour cluster over here. I don't think it's gonna matter on the way down. Like, this isn't gonna hold. It might for a scalp, but that's your 2 hour order block. It might hold, but I doubt it. I think the logical target is gonna be below that imbalance into the daily breaker over here, and then create one more tap on this trend line, something like this. And then you can see we have 1, 2, 3, and this I think could usher in, if we hold this breaker here, this could usher in the move into the monthly imbalance. So this is a gigantic imbalance right here, and that's between 37.5 and 32 basically. So again, I'm using the OTE for where I think the max could be. Max push up 786, so like around 36.5 to 35.4. But a lot of people are going to be looking for that short under this structure right here, 34 to 36. So I think I have a feeling that might get front run. And what they might end up doing to mess with everyone is take this wick to here, take these guys out one last time, and SFP rebalancing this weekly candle over here, and then push down. If it does that, then you're looking at a pretty clean 3 drives pattern. It's your low, this is your first impulse, correction, impulse, correction, and that would be the 113 right there. And then you would look for the 886, which is going to end up in this imbalance right here. So if this is a 3 drives pattern, you basically have drive 1, drive 2, drive 3. Drive 3 to the 113 would take out this external liquidity range right here, rebalance that weekly imbalance, and then you would have a case for potential short on weakness if it SFPs down to the 886. Now, if it does that and it disregards all the breakers on the way down, you would have a shark, a pretty clean classic bullish shark. So right there, more or less that range. And what that would do is rebalance this area right here. And then you would be looking for a reclaim of this structure right here. So to me, this would make a lot of sense, and I would be hunting shorts if we did a 113 rejection. Scott Carney talks about the 113 as the failed wave, and there's overlap with Elliott wave theory and harmonic theory, where this I think is wave 3 or 5 at the 113, and this is the failed wave. If it fails to break above 113, then the target on this second wave within the harmonic, or the M or W, again, this is a bullish structure. If you flip it, the W would be a bearish one. So if it hits the 113 but fails to accept above, then you would be targeting 886 on the wave. Now, if it accepts above the 113, you're looking at the 1618 above. Yeah, sorry, not within this wave structure, but let's see, 1618. Nah, that's not right. Sorry, I'm getting this part wrong. But the point is, 113 is where you want to see acceptance above, and then you would be likely filling this monthly imbalance. If you don't, and you get rejected at the 113 after taking external range into here, then you would be targeting this area. This would be my new draw on liquidity, and then I would look for reclaim of the structure, otherwise potential new lows. So that would be an area to consider a short if we get rejected up here. Anyway, that's the BTC ES NQ update. If you guys have questions, reach out to me in the main chat. All right, cheers guys.